the vast ocean of exchange-traded funds (ETFs), Fidelity Investments plots a distinct course with its fleet of actively managed offerings. While passive index funds dominate in terms of volume, these actively steered vessels present a potentially rewarding alternative for discerning investors seeking to navigate beyond the passive horizon. This article delves into the intricacies of Fidelity's active ETF Armada, exploring their allure, intricacies, and unique path within the investment landscape, while also examining the recent surge in interest towards these offerings and its implications for individual investors. Active navigation, beyond benchmark buoys. Unlike their passively tracking counterparts tethered to the buoys of market indices, Fidelity's active ETFs boast seasoned portfolio managers at the helm. These skilled captains, armed with meticulous research, market insights, and a keen eye for opportunity, actively pilot the fund's holdings, aiming to outperform established benchmarks or carve out their own profitable routes. Imagine not simply drifting along the tranquil currents of index replication, but actively charting a course towards alpha potential with experienced navigators leading the way. The elusive siren song of alpha. The whisper of alpha, the coveted outperformance compared to benchmarks, might entice investors towards Fidelity's active offerings. However, this alluring melody requires a closer examination. While the potential for higher returns beckons, it's crucial to remember that active management isn't a magical spell guaranteeing smooth sailing. Dynamic maneuvering in shifting markets. Unlike rigid index funds confined to predetermined holdings, Fidelity's active ETFs possess the agility to adjust their sails and navigate dynamically as market winds shift. Think of them as nimble yachts swiftly altering course based on emerging opportunities or approaching squalls, compared to sluggish cruise ships bound by inflexible itineraries. This nimbleness can potentially mitigate downside risks and capitalize on fleeting market currents. Charting tailored voyages for diversified horizons. Fidelity's active ETF fleet isn't a monotonous armada sailing in unison. Each vessel embarks on a distinct voyage, with some focusing on specific market segments or thematic investment avenues, catering to investors with diverse goals and risk appetites. Imagine charting a course towards sustainable infrastructure companies or exploring the frontiers of emerging markets, instead of traversing the expansive waters of a general market index. Riding the wave of investor sentiment. A recent surge in online searches for Fidelity's active ETFs has ignited curiosity among market participants. This increased interest stems from several factors. Market volatility. As choppy waters roil financial markets, investors crave alternative navigation strategies beyond passive index funds. Actively managed ETFs, with their potential for alpha generation and dynamic course adjustments, present a compelling option in this turbulent environment. Targeted marketing. Fidelity has actively promoted its active offerings through targeted advertising campaigns, educational content, and partnerships with financial advisors. This strategic effort has naturally driven online searches for further information. Performance prowess. Some Fidelity active ETFs have delivered impressive returns, outperforming benchmarks in specific sectors or asset classes. These victories, heralded by financial media and analysts, have propelled these funds onto the radar of investors seeking alpha potential. Thematic allure. Fidelity's arsenal includes ETFs targeting uncharted territories like clean energy and artificial intelligence. Investors seeking exposure to these burgeoning themes naturally gravitate towards online research to navigate this dynamic landscape. Navigating the implications, opportunities and cautions for investors. This rising tide presents both fertile opportunities and hidden reefs for individual investors. Alpha potential. Actively managed ETFs, when meticulously chosen, can potentially outperform benchmarks, enriching your portfolio's returns. However, this pursuit requires careful consideration of higher fees and the inherent risk of underperformance. Expert guidance: thoroughly scrutinize the fund's management team before entrusting your capital. Seek seasoned navigators with a proven track record of charting profitable courses and a clear investment philosophy aligned with your goals. Diversification compass: actively managed ETFs can offer targeted exposure to specific sectors or asset classes, enhancing portfolio diversification and potentially mitigating risk. However, ensure these funds don't significantly overlap with existing holdings to avoid overconcentration in any particular area. No guaranteed fair winds. Past performance, while illuminating past successes, is no crystal ball for future conditions. Actively managed ETFs are not immune to market downturns and can still experience losses, just like any other investment vehicle. The verdict: weighing anchor or hoisting the sails? The surge in interest towards Fidelity's active ETFs reflects a broader market search for alternative investment strategies in uncertain times. However, individual investors must tread these waters with prudence. Conduct thorough research, assess your risk tolerance, and carefully evaluate the fund's management expertise and investment strategy before setting sail. Only then can you determine whether Fidelity's active offerings deserve a place in your investment portfolio. Remember, while the potential rewards are alluring, successful navigation requires a discerning eye and a well-charted course. So, weigh anchor with prudence, but if your research points towards favorable winds, hoist the sails with confidence and embark on your investment journey with a clear destination in mind. Beyond the hype, a critical lens for evaluation. While the recent buzz surrounding Fidelity's active ETFs presents an intriguing opportunity, it's crucial to avoid succumbing to hype and engage in critical evaluation before investing. Remember, these actively managed vessels face their own unique challenges. Expense headwinds: compared to their passive counterparts, actively managed ETFs incur higher fees, eroding a portion of potential returns over time. Weigh the potential alpha gain against the cost of skilled skippers before setting sail. Performance fog: past performance, while promising, isn't a guarantee of future success. Actively managed ETFs can misstep or fall victim to market turbulence, leading to underperformance. Thorough research into the fund's investment strategy, risk management practices, and historical performance across various market conditions is paramount. Human factor currents: active management introduces the human element, with the success of the voyage hinging on the captain's skill and decision-making. Scrutinize the management team's experience, track record, and investment philosophy to ensure their approach aligns with your risk tolerance and goals. Finding your seaworthy vessel: a tailored approach. Don't be tempted to blindly join the Armada. Instead, chart your own course by aligning your investment objectives with the right actively managed ETF. Know your risk appetite: are you a seasoned sailor navigating choppy waters with comfort, or a cautious traveler seeking calmer seas? Align your risk tolerance with the fund's volatility and investment strategy. Define your destination: seeking alpha in established sectors, exploring thematic frontiers like clean energy, or aiming for targeted diversification? Choose a fund that caters to your specific investment goals. Trust your captains: research the management team's expertise, track record, and investment philosophy. Do their skills and approach inspire confidence in their ability to navigate market currents? Active or passive: a balanced portfolio compass. Remember, actively managed ETFs aren't a silver bullet. A well-balanced portfolio often benefits from a judicious blend of active and passive strategies. Consider incorporating actively managed ETFs for targeted exposure, alpha potential, and dynamic course adjustments, while leveraging passive index funds for broad market diversification and cost efficiency. Setting sail with confidence, a final reflection. Fidelity's active ETF Armada presents a compelling option for discerning investors seeking to navigate beyond the passive horizon. However, embarking on this journey requires careful consideration, thorough research, and a clear understanding of the inherent risks and rewards. Approach these vessels with a critical eye, prioritize your investment goals, and choose your captains wisely. By charting your own course and navigating with prudence, you can confidently hoist the sails and embark on a rewarding investment voyage within the vast ocean of ETFs.